Insurance Business was recently on the ground at RiskWorld, the Risk and Insurance Management Society's annual summit, where we heard insurance executives' views on the most critical issues in the industry today. In this episode of Insurance Business TV, we ask, how are client expectations evolving, and what is your organization doing to keep up?
About 20 years ago, insurance was pretty simple. Insurers tried to get coverage for a risk. We'd evaluate the risk, we'd price the risk, and we would sell them an insurance policy to take care of their specific loss. The industry has evolved. We're more of a solution provider now as a carrier. And in offering solution provision, we have to understand their business better. We have to be an integral part of their team and understand what their business is and what their goals are within the business. For instance, Chubb, Zurich, and Berkshire Hathaway recently recognized that the excess casualty market is in need of a change. The pricing is getting bigger, the losses are getting even bigger and faster and longer. So we've developed a joint, offering to the market to try to solve and give the solution that will be better for the long-term sustainability of the excess casualty business.
Clients are really expecting to work with industry specialists, brokers that know their business, that live their business, that understand the dynamics of their business. The pace of business is changing rapidly. It's growing far more quickly. It's more complex. And they want specialists and expertise around their business to help them in terms of their evolving risks in the marketplace. What we're doing, we believe data analytics are a big part of that. We think that the industry has done a decent job in terms of growing the analytics capabilities, but it's very generic in many cases. And we're trying to make a very concerted effort and a big investment, a big push around getting data that is actually far more meaningful, more intimate, and more predictive that helps client run their business.
Clients today are faced with a pretty wild world today. I think we all kind of understand there's a lot of geopolitical risk, there's a lot of changing climate risk, there's a lot of risk coming with new technologies emerging at all times. There's a lot of risks that are changing on a day-to-day basis for them. In addition, I think there's also some expectations that clients are building just in the way that we all use technology in our daily lives, right? So we all have little computers that we hold in our hands, or we can get, data and analytics or data and insights around the restaurants we go to, the food that we eat, the movies we want to see, as well as our banking apps, right? We understand when we make a purchase, what that does to our personal balance sheets, right? So all of us are used to this, and our clients are used to this kind of immediate feedback. And so when they come into the insurance world in such a wild, kind of volatile environment, that is our world today, we want to give them data-driven insights that help them make decisions with confidence. And so to help our clients manage a lot of these changing environment and a lot of these expectations, we have invested very heavily in the data and analytics space, right? So as part of giving our clients the tools that they need to make decisions with confidence, we have built a digital platform that we call Blue Eye to help them understand what it is about them that drives their risk, how they can better finance that risk, how they can better change their risk picture, and how they can manage claims when they do happen. So when we actually do have a bad scenario, what do we do in a post-loss basis to help minimize the damage to that client? And what can we do in a pre-loss basis to help them avoid those things going forward?
Clients these days are really looking for direct support from their brokers. They're looking for close personal contact. They're looking for brokers that are supporting them and looking out for their interests and are highly specialized to be able to lead them and guide them in terms of managing their risk and controlling their cost of risk for their organizations. Our organization is highly specialized and has a network of highly specialized brokers, producers, risk consultants, claims specialists who are well out in front of the demands of current and emerging markets. They're instructional in supporting our clients and ensuring that our clients have the best information and are able to make the most important decisions around managing risk.
Well, I really have this privilege of starting my career on the client side. So the evolution that I've seen during my last 25 plus, I'm dating myself, years, it has been quite profound. I feel like we've seen a devaluation of risk manager role for a while, and now we're back in the C-suite environment. With everything that's going on around the world, risk management has a bigger voice, and I think it needs to continue on that trajectory. It's really important that we see the evolution of the client. There's more and more need for consultative approach versus transactional. Obviously, we hope that AI fixes some of those inefficiencies in our industry, but the clients are definitely looking for solutions that are something that are new and different and global in nature. With everything that's going on in the world right now, they're shifting their focus and they're working day to day on changes that are happening from the geopolitical perspective. So we just have to be right along with them to make sure we meet their and exceed their needs.
Well, client expectations for us are all about the expectations of our customers. So we serve insurance companies, brokers, risk managers. What their customers care about is being able to keep up with that unpredictability of events and that increase in severity. And what we do is provide information while the events are happening that enables our customers to provide much more rich information, enabling more rapid action to be taken while the events are unfolding. So looking forward into the hurricane season this year, traditionally, there's a real blind spot for insurers, brokers, risk managers when events have made landfall, and as they develop and as they're dumping huge amounts of water, as the storm surge is happening, and as wind damage is occurring. And what we're able to do and what we'll be doing for customers this year is provide a very rapid damage heat map that shows which buildings have been damaged in which areas, and overlay that with flood analysis that shows how deep the water is and where the water's gone. So together, that means that customers of our customers will be much more rapidly supported when those events occur.
Well, we started the business in 2021, and our fixation at the beginning was really to say we didn't want to be really broad and do lots of different things. So we wanted to go deep rather than broad and focus on a handful of things. But we really fixated our engagement with the clients, and particularly around how we use data. So I think every insurance company you speak to will talk about their use of data and analytics. And for us, though, it was really important that we were able to take all that data and analysis and then play it back and share it with customers. So for us, we are absolutely fixated on learning as much as we can about the risks that we see. We then overlay them with the client profiles that we see from other companies, and we play it back through peer analysis to the client so that we've got a really rich and embedded discussion around how we can help, almost like open source data, candidly.
Yeah, I think expectations of clients, we've kind of got clients in two buckets. One is the Lloyd's broker who are producing that business into London for us. And generally for them, when we've asked them, it's about speed of service. And in order for us to give them the best possible response as quickly as possible, we've employed a new data scrubbing tool, which is AI-based. That then feeds into a web-based pricing model, and we've hired additional resource, and this is all built around that speed of service for the Lloyd's broker as a client. And then you've also got the client who's the end user of the commercial property policy. As always, their expectations are around cost generally. So we're engaging in conversations with them about what improvements they can make to their risk management, what investments they can make to build resilience in their risk. And I think that all feeds through then to consistency in the pricing we can provide for them.
It's a dynamic world, right? I think if you look at a casualty customer where you have workers' compensation, you have auto liability, general liability, and then you have the excess tower, all those lines of business have different needs and expectations from the customer eyes. On the workers' comp side, our customers are extremely sophisticated, right? They purchase a lot of risk engineering services. So making sure that we have the right services in place. We're continuing to evolve and protect their workforce. On the auto side, working with them to understand, what do they need from a telematics standpoint? How can we make them better commercial auto risks? It's a very difficult landscape. You have both inflation, economic inflation, and social inflation. So we're trying to work with them to figure out how we can make them better, because there's always going to be this inflational element. But if you're operating at best-in-class capabilities and driving down your loss costs, that's going to both improve your bottom line and help us be able to provide more capacity. Now, on the liability, that's where it gets a little tricky, is navigating and helping our customers really understand what's driving capacity constraints, pricing increases. Again, this was critical over the last several years. We've been hearing this loud and clear, looking for solutions, innovative solutions. So we've worked with Chubb and Berkshire Hathaway to put together this $100 million lead excess facility that is aimed to help give the customer confidence in terms of having partners behind them, with them, to be able to be there and stand in front of, and being willing to fight the plaintiff's bar in terms of, trying to curb the social inflation trend that's driving up loss costs, and driving up premiums. So, but it starts with listening, right? You have to listen to the customer, and then react. And that's what our business is all about, is we're a relationship carrier, and we look for customers who are relationship buyers.
Yeah, I would say that, one of the factors is that where clients are evolving is sort of the speed in which businesses is being conducted and the expectations for answers and solutions. So we've sort of been focusing on tools to allow us to improve our speed to market, and to address those questions or provide solutions in a more timely manner that fits better the client's expectations and demands on their side. I would also say that the need for data is critical to drive a lot more decisions on both sides. And so providing access to data for our clients, we're a large multinational insurer that has a lot of data at our disposal, so any ability to share that data with our clients to help them make decisions on their side, better risk management decisions on their side, is a value add that is well received. And then I would say, as technology in general is expanding and advancing, that understanding how to use this technology in an appropriate manner to manage the risk management, but also some technology, with it being new, and I'm speaking from a construction perspective, new technology for construction underwriters sometimes needs a further investigation to make sure that the technology is proven and will not lead to potentially insurable losses that could be avoided. So we just want to make sure that we have our eyes wide open, we understand the technology, and that we're able to provide an insurance solution that both meets the client's expectations and our expectations on what we look to cover when we issue that policy.
When I started more than 40 years ago, it was all about who could swing a golf club and who is going to be that guy. It's not that anymore. It's now about data. It's not about understanding the business concerns. It is about understanding, as I mentioned before, macroeconomics, and understanding why a client needs to assume or transfer risk, and then being the trusted advisor who will help them identify the methods and means by which they will do that. And so what Gallagher is doing, and I'm very proud of my organization, it's my fourth company. I've been doing this almost 42 years. And we have a very clear focus on not just data and the analytics, but the gestalt of a client. So you can't just say every client is universal. They're not. Every client has unique needs and unique operating platforms. And so we are very focused on making sure that the response that we give them is specific to who they are. And that is the plethora of everything from alternative risk finance to data, to creating insurance-linked securities, to whatever they need, we can do it. So it's a wonderful time.
I think that all of our customers, regardless of whether or not they are public entities or corporates, continue to be concerned about losses that they are not going to have covered by traditional insurance after natural catastrophe events. And that's why we've made such an investment in the parametric space, the parametric NatCat space, where we've been involved now for well over a decade, almost 2 decades now, in providing our clients with insurance options that would allow them to more holistically increase their coverage, obtain coverage for losses that would otherwise be unfunded or underfunded, and more quickly recover from hurricanes, earthquakes, severe convective storms, and floods.
I think the key word for me is integrated risk management, which means that companies and risk managers are more and more moving into putting together the different pieces like the insurance part and mitigation and compliance part, enterprise risk management part. And so the brokers, I think, like my organization, they have to evolve in a similar way. So they need to be able to speak the same language as risk manager, which means a language of integrating not just the insurance part, but also all the other components of an integrated risk management consultancy service. And also they need to have within their own ecosystem the ability to provide all those services. So not anymore just intermediation of insurance, but also risk management consultancy and also risk loss prevention, risk engineering, compliance, all those things needs to be part of the proposition. And this is also what our organization, Brokers Link, is trying to do.
I think our clients have very real expectations about our ability to communicate the whys of our underwriting decisions, and they're demanding better data associated with that. So as they need to communicate upstream to management teams that are equipped with great data, they really want to understand the loss drivers of the portfolio, the trends, whether or not they're portfolio issues, whether or not they're individual risk issues. But I think the level of dialogue with our clients has elevated in the last few years and continues to as we introduce more and more technology into the insurance environment.
Client expectations are always changing. Really what's top of mind for clients is the quality of service, the expertise that we bring to the table, and also innovation. So one of the things at Gallagher Bassett that we're really focused on is how do we bring the innovation not only to help our clients, but also to help our resolution managers at the desk level. One of the great examples is you're going to hear buzzwords like Gen AI. So one of the things that Gallagher Bassett is doing is how do we bring that to the forefront of our resolution manager's desk? And it's really to take off a lot of that administrative functions that they do to allow them to be a lot more strategic on the desk. So a great example is the claim summarizer that we rolled out to our resolution managers. It gives them an opportunity to have a great snapshot of how the claim is performing. And that is something that we look forward to releasing to our clients later this year.
Well, if I look back about 10, 15 years ago, I think that the expectation of our clients was to assess their risk and then for them to transfer some of it. If I think now, I think the assessment is still necessary. I think they're looking for us more to partner in the risk mitigation. And instead of risk transfer, I think they're looking for innovative solutions. So when I think about what Swiss Re Corporate Solutions is able to do, I think we're able to partner more on the assessment piece with them. So it's really their risk. If we are able to give them tools and capabilities where they can partner in that assessment transparently, I think that's their stronger comfort level with what their risk is before they look for the solutions. And then I think all carriers across the value chain really need to come to the table with things that are more than just traditional risk transfer. And things that we do around that are parametric solutions, where you're able to really carve out a very specific piece of your entire risk landscape and try and ensure that independent of the overall program. Or situations where you need a structured solution that is done more on a multi-year, multi-line basis. So I think our clients should expect more of us, but I really think the industry is rising to the occasions.